To liquidity narrative, these are the key liquidity levels institutions will likely target this week. So let's map the liquidity narrative for the week. In this briefing, we'll map the NASDAQ, which is the US tech. We'll look at British pound USD, Euro USD, and British pound JPY using our weekly dealing range as our framework. Remember, the objective is not to predict, it's not for prediction. The objective is simple, identifying where liquidity sits and where price is likely to deliver. So we'll be starting first with our NASDAQ, which is the US tech. As you can see, looking at the chart, our weekly dealing range is between those highs. The high is the 26,216.1 level and the lows, the 24,147.1. Watching those dealing range, as you can see, NASDAQ is currently trading at discount within the weekly dealing range we've mapped out, as it was coming from the previous weekly and daily old lows, where liquidity was actually taken as at last week. So we drop on our daily time frame, we begin to look out for our draw on liquidity, which will be looking at those mapped out levels, the daily order block on the 24,962.0s. Then the next with daily old highs, which is the 25,201.9, all these levels that we've mapped out. Then the next, if price continues, will be the weekly order block, which resides at the 25,301.50 levels. Then if price actually continues, these are the areas on the upside target that we are looking at. It will be the next daily old high, which is the 25,446.4. Then the older weekly order block at the 25,606.7. Those are the areas we are looking at as our draw on liquidities. This level represents the primary upside liquidity targets if price begin expanding from the discount level it is now to the upside. Then the reaction level we'll be looking at the downside of this dealing range, which are the key reaction zones we mapped out. We'll be looking at the 24,578.1 level, as you can see here, then the 24,463.7, and lastly the 24,315.3 levels. If price reacts lower first, so these previous weekly lows becomes the reaction levels to monitor for our US tech. So if price continues lower after reacting from those levels, then the weekly dealing range lower at the 24,147.1 becomes the external draw on liquidity. So these are the areas we are looking at for for our US tech. The scenario, our narrative for the week on US tech. Our draw on liquidity moving next to the British pound USD. As you can see on the charts, we also have the weekly dealing range we are looking at, the highs on those weekly range, which is the 1.3868 levels, and then the low, which is the 1.3342. These become our dealing range on the weekly using the British pound USD. So British pound USD is trading at a discount within this range that we mapped out after delivering from a monthly fair value gap and cleaning previous weekly and daily lows. That was what happened last week on British pound USD. So be focusing, dropping down to our daily time frame. Be focusing on this where our draw on liquidity, looking within the range on the weekly range we've mapped out. So first we're looking at the daily fair value gap. Yes, the daily fair value gap at this 1.3426. The next with the daily order block at this level, the 1.3488 levels. And if it continues, then we'll be expecting price to get to the weekly fair value gap, which is also the daily order block. The daily old highs at the 1.3537 before it could, or we think of it getting to the weekly order block which is also a daily fair value gap at the 1.3611. These levels represent our next upside liquidity pools if price begins to rebalance itself from where it was coming from. Then we won't forget to also mention our key downside reaction zones, or the key level we are looking for reactions, which we've also mapped out using the daily order block at 1.3376. And if it continues, the next one will be on the 4H, as you can see, which is also a fair value gap on the 1H, 1.3356, and also a previous weekly lows at 1.3297. So we said this: if price reacts lower first, these levels may provide a kind of support before the next liquidity expansion begins for that of British pound USD. So let's keep our eyes on those levels, as it is our liquidity narrative on British pound USD for this week. The next on our list will be Euro USD, which is the next on our list on our chart. Still looking at dropping to Euro USD, looking also at the weekly range that we've mapped out. We're using the high 1.1928, as you can see, and the low, the 1.1577. So Euro is also trading at discount also, just like British pound USD, after clearing the previous weekly low and taking downside liquidity also as at last week. We are dropping to the daily time frame. So where is our draw on liquidity using our daily time frame? As you can watch on the daily time frame, we want to see price being drawn to the daily inefficiency between the 1.1706 to that of the 1.1743 levels. If it continues up, our next drawn liquidity will be the daily order block sitting right here at the 1.1773, and then the next on our list we are watching, our watch list, will be the weekly order block, which you can see is at the level 1.1780 level. And if it continues more, then we'll look at the 1.1780 levels, and then the next will be the daily order block, also at the 1.1796. These inefficiencies and order block represents the upside draw on liquidity that we are looking at for. We are focusing on our Euro USD those week and beyond. But then we will ask the question, where is our reaction levels that we are watching out for this Euro USD? Looking at the downside of the chart, we are looking at FX, the fair value gap on the 1H, which is 1.1579, and probably the other block also on the 4H, which is the 1.1574 levels. And if it continues a little bit down, then we probably look at it taking out the previous weekly lows, which resides below the 1.1544 levels. If price react lower first, so these levels could provide the next reaction before the upside liquidity is targeted. That's our narrative on Euro USD we are watching out for this week. So our eyes are on this week. Our last pair for the week, also, which will be we dropping down to the British pound JPY, also using the daily range on British pound JPY. So we are looking at this high at the 214.98 and the low at 207.27. So British JPY is currently trading at a premier zone within this dealing range, this weekly dealing range, after filling a monthly fair value gap. As at last week, it went back respecting the daily order block. As at last week, as we can see here, reacted and the order block started to move up. So if we drop actually, if we're looking at our, just as we're looking at our daily order block here, so where our draw on liquidity? First, we want to see price reacting upside here at the weekly order block, residing at a 211.79. And I want to see a reaction there. But if peradventure price continue to go up, the next draw on liquidity will be on the 212.09. And then next will be the order block on the daily order block at residing here at the 212.47 before it can reach the 213.30 levels. So this level represents the upside liquidity target if price continues expanding higher on British pound JPY, whereby our key reaction zones or levels remains the order block on the daily, the 210.6, and the previous weekly lows 210.27. Remember which level trades first between those reactions key levels and the upside liquidity target will likely define the direction for the week, as we expect price to fill the weekly fair value gap and see what happens then after. So we can say these are the key liquidity levels for the week across the NASDAQ, that's USD, British pound USD, our Euro USD, and British pound JPY. Those areas we mapped out are where we are looking at using our weekly dealing range, the reaction levels, the draw on liquidity. The objective is to understand where liquidity sits and how price delivers into those levels. Structure over speculation. Liquidity narrative for the week. Thank you.